So, colleagues, today is Tuesday, the start of the trading week, and let's look at the market from a wave analysis perspective. Let's start with the first instrument, the euro-dollar currency pair. For the euro-dollar currency pair, we are observing a clear upward trend forming here, followed by a sequence of waves 1, 2, 3, 4, and 5. After the fifth wave, we have a correction in the opposite direction, labeled ABC. After the completion of wave C, a brand new cycle always begins, initiating with the first and second waves, which signals the commencement of a fresh trend. After this, I see upward movement forming waves 1, 2, 3, 4, and 5, which is one impulse. After the initial impulse wave, we observe an irregular correction in the wave structure, consisting of wave A followed by wave B and concluding with wave C. The primary rules for irregular corrections indicate that wave B adjusts to exceed the maximum point of the initial wave, whereas wave C revises to lower than the minimum of wave A. This important detail can be clearly observed in the book on wave analysis. Guys, if anyone wants the book, feel free to message me directly or on Telegram and I'll send it for free. It contains all the various wave correction patterns for analysis. I've recently begun to study correction waves in much greater detail and am highlighting several types of waves that I had not previously noticed in the market before, which has been quite enlightening and informative. Recently, the market has been experiencing extended corrections, which can be effectively identified using the insights from this book. If you clearly understand the specific type of correction it is, you will first determine where wave C will conclude, and in the case of a regular correction, wave C typically ends below the level of wave A. Secondly, you'll have a clear idea of where this market correction is likely to finish, and from that point, a new upward price impulse should ideally begin. Therefore, it is absolutely crucial to know and fully understand the various corrective forms, which include over 100 different types. I typically cover these in my correction training sessions, and it is highly recommended that everyone also take the time to study this important subject. So guys, we are holding the euro sell. We have experienced a deal in decline for approximately 3 weeks now, and the market is consistently falling by 100 to 200 points each week. I anticipate a continued decline, and ultimately wave C will reach completion. Here we successfully sold, and my risk on the deal is already at break-even, which is set at $207, while my profit stands at $3,180, and I plan to fix around this level. For our targets, we have set specific goals of 1.1400 and 1.1550, and there remains approximately 160 points of potential euro decline that can be addressed. Next, the 4-hour time frame for the euro-dollar has formed an upward trend within waves 1, 2, 3, 4, 5. Then we have an ABC correction, and we are currently testing the 50% Fibonacci level. Following that period, we then enter a new downward cycle, and at present we are actively working on developing this wave C on the daily time frame. So congratulations to everyone on the euro, by the way. I gave this recommendation on Instagram on September 22nd, stating that this would be a regular type of correction. Many said it wouldn't happen, but as you can see, guys, 2 to 3 weeks have passed, the market has fallen, and it continues to decline. Therefore, each of you could have easily earned an additional 200 to 300 points simply by making your deposit, which was a straightforward opportunity. Let's move on. The next instrument is dollar-franc. Concerning the dollar-franc currency pair, dear colleagues, for those of you in my private closed channel, we initiated buy positions 2 weeks ago for potential profit opportunities. What's the general idea? Here we have a noticeable descending trend clearly forming and developing within 1, 2, 3, 4, and 5 distinct observations. After that, we have a breakout of the triangle, which indicates that it's not a triangle, but rather a descending channel breakout, and then we see the formation of wave A, wave B, and wave C. We should aim to correct at least to the 61.8% or 50% level, and that will signify the completion of the correction. This entire downward movement has been consistently ongoing since January, and now we are almost at the end of the year. We have been navigating through this 5-wave structure throughout the entire year. I believe that by the end of this year, specifically in the months of October, November, and December, we will successfully complete this ABC correction pattern, which will represent wave 1. Following this, we will enter wave 2, and I anticipate that next year we will observe a decline in the dollar-franc exchange rate once again. Therefore, we can already begin to understand what next year might look like, as well as how this current year is likely to conclude. So, dollar franc, well done, 3,200 profit here in the market, just like with the euro. The euro is falling while the dollar franc is rising, and our potential profit is at the 61.8 level, around 9,400, which I would like to take. I believe it would be wise for us to wait until around October or November to consider taking this position. On the 4-hour time frame, we clearly observe the formation of 5 distinct waves moving downward, followed by an ABC correction, and then a new cycle of upward movement begins. The primary concept we focus on within the daily time frame will be this ABC correction, leading us to aim for buying opportunities. Let's progress to the dollar-yen currency pair, everyone. It's time to take a closer look at the market trends. By the way, today the currency market is all in the green zone. When we examine all 6 different currencies that we actively trade, we are currently seeing profits ranging from 300 to 400 points across the board. If all positions close in the positive, we can expect around a 20% profit while maintaining a minimal risk of just 1%. This scenario indicates that a trending market has begun, and such a market is precisely the kind that facilitates profitable earnings opportunities. There are absolutely no sideways movements in the market. Everything is consistently trending upward or downward. These trending markets should not be overlooked, as you need to recover the losses you incurred during previous sideways markets and so on. If you miss such opportunities, there will probably be sideways movement again after the trend, and you will continue to lose, unable to cover your losses. In this analysis, we observe the dollar-yen currency pair on the daily time frame, where the initial bullish impulse is forming, followed by a correction phase, then a subsequent third wave impulse, and finally a fourth corrective wave. Here we see that the third wave is updating the maximum of the first wave, indicating that the third wave is underway and has not yet reached the Fibonacci level of 161.8, followed by a fourth correction in a triangle and then a fifth wave of growth. We have broken down the trend into 5 waves, and I also see that the fifth wave has not yet reached the 161.8 level. Ideally, we should aim to reach this specific mark. However, we can also fluctuate either up or down. Additionally, there might be a unique exception where we could potentially conclude this fifth wave right here. So, for now, I'm holding my buys, moving my stop, and let's take a look at the 4-hour time frame, as many are asking how to find the first and second waves. To answer this particular question, the first and second waves are identified within the context of the higher time frame. This means that if my fourth wave is finishing at this point, it logically follows that on the 4-hour time frame there should be a clearly defined first, second, third, fourth, and now a fifth wave indicating the completion of the cycle. Allow me to present to you the 4-hour time frame, as it is crucial to note that, in my experience, 90% of traders often find that everything they draw is entirely incorrect. It's essential to analyze both higher and lower time frames. You must revisit the foundational concepts to accurately draw trends. For more insights, feel free to join my live stream where I provide valuable information. Examine the 4-hour time frame closely. In this analysis, the fourth wave has fully completed on the daily chart, which was followed by an impulse, then a second correction, with the third wave proving to be the longest in length. After that, we need to apply the Fibonacci ruler to measure how strong or weak the trend is. This is determined by the third wave. If the third wave reaches the 161.8 level, it indicates a strong and significant upward trend. And now, by the way, I can clearly see a triangle forming. A triangle pattern, as I believe, is quite familiar to those of you who have been following my analysis for some time. It's no secret that this is regarded as a corrective figure, indicating that the yen may currently be forming a triangle during the fourth wave. Soon, we could anticipate the breakout of this triangle, which would then lead us into the fifth wave. If the fifth wave indeed begins, we should ideally aim to reach the target level of 261.8. This is because the third wave has proven to be the longest here, while the fourth wave did not exceed 1, and the fifth wave is projected to move towards the 261.8 level. I'm currently maintaining long positions on the dollar-yen, as there is significant growth potential. If this fourth wave successfully completes its course, you'll still have the opportunity to profit. That's precisely why I'm maintaining long positions on the dollar-yen currency pair, everyone, with a total profit of 7,500. Based on my currency pairs, I've already seen over 25,000 that can be earned if all currencies close at their targets, which are almost 80% on track. So well done to everyone in my closed channel who is trading currencies. I think you'll make a lot of money in October purely from the currency market. Unfortunately, gold isn't giving us a chance to earn right now. However, the currency market is currently providing several lucrative opportunities. There's a notable difference during certain months when we actively trade various currencies while gold remains stagnant and unchanging. Currently, however, gold isn't presenting any trading opportunities, while other currencies are proving to be more favorable. That's precisely why you should consistently maintain a diverse portfolio of various financial instruments. You'll discover opportunities to earn returns in different markets. So I'm holding my purchase. The next instrument is the dollar Canadian. Colleagues, we're doing great with the dollar Canadian. We're also holding long positions. Just a quick reminder about our discussion from last week when I mentioned that I was focusing on the breakout of the triangle pattern here, specifically in the context of the third wave. We completed the first week, moved on to the second week, and now the third week is actively progressing within the ongoing third wave. Having patience is extremely important for traders as it plays a crucial role in achieving success in medium-term trading strategies. If you close trades quickly and don't let profits grow, unfortunately you won't cover losing trades. But if you take one such position with a short stop and a large profit, this is what wave analysis is based on, allowing the 3 to 5 wave to work out. This is what I teach, taking such positions. You can recover your 5 losses with one profitable position, and believe me, you'll be very happy about it, rather than quickly fixing profits and needing many profitable trades because trends are very rare. Such trends will pass now, and then there will be another sideways movement. In general, these types of markets should not be missed. They occur infrequently, making them a rare opportunity. Overall, the Canadian dollar has a profit of 2,700 here. I think it's not far from reaching profit. And for the time being, we will hold our purchases right here. Colleagues, let me show you what I have in terms of currency pairs. We are trading 6 currency pairs. The first currency pair is Euro-Dollar with a profit of 3,800. If we reach Takeo, the second currency pair has a profit of 3,100, here 9,400, so already 12,000 on 2 currencies. Next, USD-JPY. If it reaches the target, 7,600 makes it 16,000. The New Zealand dollar is also falling. We are working on the third wave here. Here we have a profit of 4,200, bringing us to around 20,000 total. The Canadian dollar is currently at an impressive 2,722%, while the Australian dollar is also nearing take profit levels at approximately 3,700. For the 6 currency pairs we're tracking, if all of them reach their take profit targets, we could see an overall profit of about 25% with a manageable risk of just 1%. All trades were executed with this 1% risk factor in mind, and at this stage we are already in the process of tightening the stop-loss orders. You have the option to adjust them, ensuring you will either break even or secure a small profit. Therefore, it is very important to actively trade currencies and not miss out on trending markets that can provide profit opportunities. Let's move on. The next instrument is gold. Currently, guys, the gold market is consistently continuing to show a remarkable rise. I'm not in my position. Last week I made an attempt to sell my items. The market experienced a slight drop, but then it began to rise again. Gold finished the day with a notable 1% loss once again. I'm not trading it yet. It's very important to set stop losses, because if someone didn't set a stop here, they will lose again, which I think is clear, probably 3 to 5 times more. It's very important to place your stop losses. I don't know when the correction in gold will start. I don't see any reversal points for entry yet. A breakout from the channel suggests a potential correction is likely to occur. As long as the price remains consistently above this defined channel, it has the potential to rise indefinitely without any apparent barriers, and I currently do not observe any significant resistance zones or reversal points above. Therefore, for the time being, we are not engaging in trading gold. On the 4-hour time frame, we observe a continuation of the 5th wave. This wave has already stretched to its maximum potential, and theoretically, this could represent the final 5. However, the market continues to rise steadily, and at this point, I don't see any clear channels forming. I might consider working on selling this channel, but it definitely won't happen today, perhaps tomorrow. In the meantime, I would focus on selling gold during the ABC correction phase for potential profit. It's too late to make a purchase. Buying should have ideally occurred somewhere around this range. However, it's not very comfortable for me to buy at such elevated prices, especially when gold is breaking through its historical maximums. It feels risky to invest now. So for now, I'm out of the market. Let the currency market generate profits for the time being. With gold, it's best to minimize losses as much as possible. Right now, colleagues, I am sure that many people held gold for sale this week. I know for sure, as I received messages of this kind, that many were asking what to do with gold as the market rises. They are currently trading against the trend without stop losses on their entire capital. I've observed gold taking deposits ranging from $15,000 to $20,000 from multiple individuals in situations like this. They often claim they can trade without utilizing stop-loss orders, but they begin to feel psychologically unsettled, coming to the realization that the volatile market might not be suitable for their trading style. Those individuals who experienced significant financial losses came to realize that the market is not their primary area of expertise. The first has no education, the second lacks a stop-loss, and the third lacks risk management per trade. Traders who fail to adhere to this crucial principle will inevitably lose money over the years, and nothing will be able to assist them, not even experience, absolutely nothing at all. If they cannot even successfully perform these fundamental tasks, then this is indeed the essential foundation that must be adhered to. If you do not follow this foundation, you will lose money. That's why many lose money here, because no one wants to adhere to this foundation. Everyone is greedy and wants to earn quickly. And additionally, many newcomers often believe that gold has limited potential for growth and appreciation. People express confusion over changing predictions of where it would go. I'll continue to add to my deposit since there's no growth elsewhere. Everyone ultimately loses money. This clearly indicates that trading against the prevailing market trend will inevitably deplete your trading deposit. I firmly believe that many traders have learned from this experience that it's generally much wiser not to trade against the prevailing trend. However, if you choose to go against it, at the very least, you should set stop losses and diligently manage your risks to prevent draining your trading deposit. This is a common mistake that many make, often leading to significant financial losses and missed opportunities for more favorable trades in the future. Let's proceed, everyone. Let's look at the next instrument, the oil market. In relation to the oil market, we made the decision to sell our oil supplies 2 weeks ago. For those who may recall on Instagram, I actually shared this specific trading recommendation at this point, suggesting that oil could be sold or potentially at this spot, while predicting a third wave of decline in its price. We only needed to wait for 2 weeks because the market experienced a correction during this time, and then it began to decline again in the second week. Patience is absolutely crucial. Without patience, you won't get anywhere in the medium term. There's no quick money here. You need to wait an average of 2 to 3 weeks to work on your position. Congratulations to all on the falling oil market. Our initial target is the 161.8 level. I think I've been holding this trade for about 3 weeks as well. The risk on this trade was only $760, previously $700, 0.7%. My profit is $4,200, meaning the trade was 1 to 6. I've waited 3 weeks and I think we'll reach the take profit soon. We have exactly 51 points left to drop, just 200 points more to fall, and then I will be able to secure the profit. So, regarding oil, it's a very easy market. There was one position to sell, wait, and take all this big profit. Next, on the 4-hour time frame, everything was also forming within the framework of the decline on the daily time frame. We had the first impulse, then the second correction, a zigzag pattern, then an impulse, then a correction, and then the next impulse. The market is still declining, following a 3-wave structure. Ideally, the 3 should reach this 161.8 level. We need to carefully analyze this current level, take the profit, then patiently wait for the upcoming 4 corrections, and then sell again for the 5. Here's my comprehensive trading plan specifically for trading oil. That's why oil prices have finally begun to move significantly. I understand it was quite uncomfortable last week because, for example, oil prices were moving within a corrective upward channel. When you trade using wave analysis, you'll understand that there is an impulse. Impulse is a fast movement, correction is a slow movement. The market correction will thoroughly test your psychological resilience, your trading strategies, your patience and discipline, and your ability to recognize that this situation is merely a correction, not a full market reversal. And as is typically the case, following the correction, a fresh impulse began this week. Impulses always move faster than corrections. Correction is a slow movement. Impulse is a drop in the direction of the trend. So it's better to trade the impulse. I consistently instruct all my students during my training sessions to focus on trading impulse waves, as they are not only the most profitable, but also the quickest in terms of execution and returns. Understanding this concept can greatly enhance their trading success. and you can get quick profits. Correction is the critical part that will truly test your psychological resilience and how well you understand the market dynamics and current events. So we hold the sell on oil. Colleagues, congratulations, there is profit. Next we have gas, everyone. Currently, positions are open on gas. The overall trading layout consists of the first impulse wave, followed by a second corrective wave, and then we see the third impulse wave. However, this third wave did not quite reach our initial targets. Interestingly, I noticed on TradingView that the gas layout did reach the 161.8% extension level, which prompted many traders to take their profits there. It's important to monitor these levels closely for future trading opportunities. And now the fourth wave of correction is happening. I'm waiting for the 5 to go up. The 5 upward movements will occur after successfully breaking this channel. From this point, the 5 can be adjusted, or alternatively, you could re-enter the market and execute a trade like this with a ratio of 1 to 5. If the market experiences a decline, and this downward movement surpasses the momentum of the third wave, it will clearly indicate a potential market reversal. In that case, we will not see a fifth wave formation here, and we must reassess our analysis to consider the market in a continuing downward trend, which may suggest further bearish movements ahead. Currently, the market has made a deep correction. If we measure the correction of the fourth wave, where we are now, we do this based on the third wave. We create a Fibonacci ruler from the end of the third wave to the start of the third wave. I observe that the market is currently squeezed between the 382 Fibonacci level and the 23.6 level. We even tested this range yesterday. This strongly indicates a high probability of a forthcoming market reversal. Another viable option is to establish a short stop loss and then focus on the next market impulse for potential gains. All experienced traders greatly appreciate the opportunity to trade during such significant deep corrections, as they provide a chance to enter a buy position following a confirmed break of a trading channel, allowing for the placement of a relatively short stop loss to manage risk effectively. And you'll have the risk on the trade and your profit. So this is what you should aim to achieve in trading. Consistently create the maximum number of positions that carry low risk while offering high potential profits. By doing this, your overall results will likely be more or less positive during the initial stages of your trading journey. So everyone, what are our next steps concerning cryptocurrency tools and resources we should explore? Concerning cryptocurrency, my friends, let's take a closer look at Bitcoin. At this moment, we observe a comprehensive trading pattern. An initial impulse for the first wave, followed by a correction in the second wave, then a strong third wave impulse, and finally, a corrective phase in the fourth wave. This entire movement, when you open a book on this subject, reveals that there are two types of corrections utilized in this context: flat correction and regular correction. This particular instance is classified as a flat correction because it has a defined maximum limit. In contrast, here we are discussing a minimum threshold. Therefore, we can represent this sequence as ABC, followed by X, and then returning to ABC. This illustrates the distinct nature of the flat correction in this scenario. This specific type of correction is thoroughly described in the book. The process is known as flat correction and regular correction, which involves two types of regular corrections. Double regular correction can also be applied or implemented here in this situation. In theory, if you refer to the book, I don't make trades based on my personal intuition. Rather, I strictly follow the guidelines and strategies outlined in it. When we examine this particular book, it's clear that Wave C represents the final wave of updates, likely drawing funds from all the buyers who made purchases earlier, and we effectively carried out this entire process. Plus, there's the impulse, and then there's the correction. If the correction is smaller than the preceding impulse, it indicates that the correction is still in progress. In this case, I would consider buying Bitcoin, but only with confirmation that another wave of growth is imminent. If Bitcoin experiences a further decline and we surpass this critical third wave, it will indicate a significant downward movement. We'll probably see Bitcoin lower, and we need to prepare to sell. Currently, the trend is being upheld because of this recent correction, and there may still be potential for further growth. Let's look at the 4-hour time frame, and I'll show you where I would buy Bitcoin. Currently, with Bitcoin's price movement, we seem to have a pattern forming that resembles 1, 2, 3, 4, 5. This might indicate that we are experiencing a correction in the market. This is how the market might go. I would consider making a purchase here, either by placing an order at this point or right here, already positioned above 2. Yesterday I was expecting growth in Bitcoin. If the growth didn't happen yesterday, I understand that we might pause here for a while. Guys, typically after experiencing such significant and powerful market movements within a short time frame, it is common for the market to transition into a period of consolidation that may last for 1, 2, or even 3 weeks before deciding on its next direction. So at this moment, I'm not really counting on making quick profits from Bitcoin because I believe we need to consolidate after this significant price movement. And I won't be trading until we break this maximum level, so that I can attempt to buy from that point, and then at least 1 or 2 formations will occur, ultimately leading to the potential for 3. The third one will be more interesting to me. Currently, while we are in this phase of consolidation, there is a possibility that we could also experience a decline here, allowing for further consolidation, so anything is possible. The trend's beginning hasn't fully formed yet. Once it does, trading Bitcoin will become significantly easier. So for now, everyone, it's best to stay out of the market and wait for clearer signals. So, Ripple, just to remind you, we traded Ripple last week. Our stop loss was strategically set above the key resistance level, but it closed me out, resulting in a loss of about 1% overall. Unfortunately, the 5 didn't fulfill itself. Also, the 4 here became larger than the 3, so the scenario is cancelled. We will not be trading Ripple at this moment in time. I personally don't see the point in investing in Ripple either, as the stop loss is too large. However, we might consider it for purchase from this point on, H4. But for now, let's not rush with cryptocurrencies. You can clearly see how manipulative the cryptocurrency market can be, which is precisely why I advise everyone that trading solely one cryptocurrency is unlikely to yield significant profits. Diversification is key in this unpredictable and volatile financial landscape. Using only crypto and wave analysis, these manipulations will often throw you off, going against wave analysis and all technical analysis. That's exactly why I trade cryptocurrencies with extreme caution. I have a deep respect for this volatile market. Unlike traditional currency markets, which I believe are relatively easier to navigate, cryptocurrencies are heavily influenced and often manipulated by various news events, including tweets from Trump and other high-profile figures. They are manipulated however they want. No one manipulates currencies like the dollar. Have you noticed such erratic movements in the dollar, where it creates these unpredictable up and down candle patterns? Many individuals are suffering because of the manipulation occurring in the cryptocurrency market. You understand it leads to immense stress, anxiety, depression, and various other related issues. Cryptocurrency is likely better suited for experienced traders, regardless of differing opinions. Now, everyone is making money on crypto, but I approach this market with respect. I understand it's the most complex, and I trade a minimal number of instruments, Bitcoin, and sometimes I trade Ripple, so you see what's happening. To successfully navigate this market, it's crucial to actively manage risk, as cryptocurrencies require careful trading, particularly for those with ample experience. Beginners, you will most likely lose money here. I recognize the impressive success that many people observe. Everyone desires to profit from cryptocurrency, yet you might be losing money instead of gaining it, though few are willing to discuss this reality openly. Be honest with yourself about this. So, esteemed colleagues, next on our agenda, we have the highly anticipated Tesla instrument. I want to show you this markup. Look how beautifully the market looks. What can you tell me? Here we have the specific formation, one clear impulse followed by 2 corrections that occur within the triangle. Remember, this is a triangle. We bought Tesla and it reached the level of 161.8. Now Tesla is in the process of forming wave A, then wave B, and potentially moving towards wave C in its market pattern. If we are indeed observing the completion of the 4th wave in this sequence, it is important to note that the 3rd wave has successfully reached the critical Fibonacci extension level of 161.8. Additionally, given the characteristics of a strong trend, the 4th wave typically should not retrace to level 1. Therefore, I would consider entering a position in Tesla for a potential breakout of this current structure, specifically around the price point of 610. This would indicate the beginning of our anticipated 5th wave. I will wait for a breakout of this channel. If there happens to be a breakout, we can strategically enter with this type of trade, utilizing a short stop and a substantial take-profit target. The trade will approximately be in the range of 1 to 5. Next target is 261.8. Tesla may continue to experience growth and ultimately finish the anticipated 5th wave. For everyone who is asking about Tesla, I believe it is currently preparing for a new 5th wave following the recent 4th correction. We will diligently work on it, actively trade, and patiently wait for the market to open so we can take advantage of this movement. Certainly, here's the expanded version of your text. So, esteemed colleagues, I would like to take a moment to remind you that I maintain a dedicated and closed channel on Telegram, where I diligently provide my thorough analysis on Tesla as well as all other financial instruments on a daily basis, continually updating my insights on the market. If you aspire to achieve similar results in the currency market, where your trades consistently yield profitable outcomes, it's important to note that, unfortunately, perfection is not guaranteed every single month. There will inevitably be stops along the way, of course, but overall, it is quite rewarding when all currencies trend in the right direction and ultimately reach their designated targets. This favorable green zone typically occurs about 2 or 3 times each year when all currencies are influenced by the dollar and move harmoniously in the desired direction, allowing all 6 to close successfully at the take profit levels. I take 20-25%. These specific months are regarded as my most profitable and financially rewarding periods of the entire year. This situation can occur consistently for about 2 or 3 months. I wish it happened more often, but unfortunately the market is structured in a way that not everything will be that simple. If anyone is interested in joining the exclusive closed channel where I share daily analysis, feel free to message me directly or reach out on Telegram. I would be happy to provide you with the detailed rates for the wave analysis services. I can also send a book to those interested. Just message me to read and familiarize yourself. Comments are now enabled, everyone.